Okay, we are live tonight. This is Rod coming at you from Fresno with the Evening Buzz tonight, and we're going to be talking about some tax tips and getting you ready for the tax man. And as always, we have my good friend and business partner on the line.
The tax man. Oh, no, I'm not the tax man. My name's Paul Sharon, and I am streaming live from Las Vegas, Nevada, out of my home studio here. And yeah, it's Sunday night, folks. Most of you guys are getting ready to go to work tomorrow. I shouldn't laugh about that. That's bad.
Yeah, that was kind of bad, but
I'm sorry.
It is what it is.
It is what it is, and you know what? Sometimes a little tough love will give people that that push over the edge that they need. And yeah, going to work sucks on Monday.
Yeah, no, it did. And, you know, when I was working, I always hated work. Monday was the worst day. I always thought Tuesdays was the best day of the week. And people go, why? I said, because it's furthest away from Monday.
Exactly. It's furthest away from coming around again on Monday. Absolutely. So we got some really cool shows this week. For those of you guys who haven't seen us before, the Evening Buzz is not a show about smoking marijuana. I hate to disappoint you on that. We are a home-based business show, or just a business show in general. We talk a little bit about the economy. We talk about, more importantly, your economy.
Now, wait a minute. That's not what you told me when we were going to start this thing.
Oh, sorry. I had to lie to get somebody else to do this with me. So we do a little bit of home business, a little bit of the economy, a little bit of me economy, and a lot of marketing and stuff like that. And we try to have a lot of fun and make this stuff fun, because some of it can get a little mundane. So what have we got planned for him this week, Rod? Obviously, we're doing the tax man tonight. What about Monday, Tuesday?
Monday and Tuesday, we're going to actually do some video marketing. So we always have a marketing Monday, and this week we're going to have marketing Monday and Tuesday, actually. So we're going to dive deep into everything that you need to know how to do video marketing. And we'll try and get it covered in 2 sessions. If not, we'll do another one next week for any follow-up that we might need to do. So that'll be pretty fun. And Wednesday, we actually have, let's see, what did we have planned for Wednesday? Let me think about this for just a second.
Is network marketing a viable business?
Yeah, that's right. Is network marketing a viable business?
Now, why did
you say yes?
And I do as well. And the reason we did that is because there's a lot of people that might be in other types of marketing. You could be in internet marketing. You could be just in a small business of some sort. And so we wanted to answer that question, because that's something that a lot of our guys are getting asked, because people don't know. And again, out of ignorance, a lot of people think that it's something that it's not. And we'll address a little bit of that. And then Thursday, we're going to finish off, kind of almost finish off our marketing Monday and Tuesday on the video side. And we're going to explain marketing with a blog and how you can bring those videos into your blog. So that's going to be cool.
So, I mean, if you're doing blogging or you're doing video marketing, I mean, those two are so, it's really not a lot of extra work to integrate one or the other if you're doing either one of those strategies to start with. So it's pretty, they're really pretty integrated, those two. So, and really, in my opinion, almost every marketing strategy, video just adds some additional bang to it. So,
absolutely, guys. If you're on Facebook, watching us on Facebook, obviously you can't participate. All you can do is watch us live. If you've got a Google Plus account, and you can obviously sign up for it while you're listening to us, you can actually jump on the live webinar with us, and you can chat with us live. So if you have any questions, you just look at the little chat window over there, and we can answer any questions for you while we're live with this. Or Rod will answer questions, because I don't know anything. So
you finally admitted that. Sweet. We got it on recording now.
I'm just going to get it out there. So let's get started. We're going to talk first a little bit about, taxes. A lot of people dread taxes, Rod, and I don't really, and I don't think other people should. When you first get started in the business, everyone's worried about getting money back, and you will when you first get started in business. But let's face it, once you start making money, you're gonna pay taxes, right?
No, absolutely. I mean, anybody that has a gets a W-2 at the end of the year, you know that you've been paying taxes all year long. It's, when it doesn't matter what business you're in, you're going to be paying taxes if you're showing profit. So.
Right. Now, the difference in a W-2 compared to a business is in a W-2 employee, your taxes are getting taken out every single week. That's the only reason, folks, that you're able to make money throughout the year and get that refund back at the end of the year. That's the only reason. In a business, it doesn't work that way. Now, you can make estimated quarterlies if you start to make money. I make estimated quarterlies. I actually pay taxes every single quarter. Every business does that. So if you've made money in the previous years, the government says, hey, we want our money up front because we don't know if you're going to pay us or not. So they ask for it quarterly, and pretty much every business does that. So the only way you're going to get a refund if you're in business is if you show a loss. It's just the way it is. If you don't make any money, you'll get a refund back. Once you start making money, you are going to pay taxes. I think it was Mark Cuban, Rod, that I saw on a show the other day, and he said one of the most patriotic things you can do is get filthy, stinking rich and pay a lot of taxes. And I have to agree with him. So,
yeah, I mean, the more taxes you're paying, the more money you're making. So, and the cool thing with business is, you can basically, unlike a W-2 employee, you can use expenses to reduce your actual, income. So, if you're showing $1 million profit and you're having to pay taxes, oh well.
Yeah, exactly.
I'll take it.
Absolutely. That's I had a friend of mine once. We were talking, and I had mentioned that particular year I had paid $12,000 in taxes or something like that, and he was just like, "Oh my God," blah. He goes like, "I got a $1,000 refund," and I was like, "That sucks," and he didn't understand that getting a $1,000 refund for me just wasn't a good thing. One, that means that I lent Uncle Sam that money for a year. You'll always hear me say that. Getting a refund back is not a thing to be excited about because you lent the government money for the entire year when you could have been using that yourself for in a savings account or to buy, as everyone else knows, we buy gold and silver. So to buy gold and silver or whatever, that's not a good thing, folks, when you get a refund. That's not something you should be shooting for. So once you start making money, it doesn't matter. You plan for it, and that's part of what this is about. We want to talk to you tonight about being prepared for the tax man, and part of that is a mental shift. If you pay, $30,000 or $40,000 in taxes a year, that means you've probably made $250,000 or more, and you prepare for those things. It's something about once you become a business owner, you start to prepare for, Rod. Right? I mean, you don't just unexpectedly owe that.
Yeah, I mean, you have to be able to manage your business, obviously, and you're gonna kind of have some projections and know what your quarterly estimates are going to be and whatnot. So, I mean, it's just it's all about planning. It's no different than your employer with a W-2. They're planning for you.
Right. Absolutely. So what we're going to do is we're going to do a screen share here on the Kiyosaki quadrants. And if you guys aren't familiar with Robert Kiyosaki and the cash flow quadrant, this is really kind of a cool thing because it's really a mindset shift for this. And I should have been ready for that. So that's not what I wanted.
Well,
let's see if I can get back out of here. Oh. Yeah, it wasn't. I didn't want that to be the first slide here. Let me do a quick change around here and try that again. Okay. So, do you see that slide now?
I surely do. Here, let me click on you so it stays up on you.
This is called the cash flow quadrant. It's out of one of Kiyosaki's books titled The Cash Flow Quadrant. And this shows you the different mindsets of the different tax brackets, really, in the different businesses. The E, the B, the S, and the I. E is an employee, which means you have a job. S is self-employed, or basically you own a job, and we'll explain that in a second. B is a business owner, which means you own a system for people to work for you. And then I is an investor. So employee, simple, right? So all the W-2 folks out there that go do their 9-to-5 thing, you're paying your taxes. You are the most taxed entity in that entire quadrant. You are the most taxed thing. If you have a W-2 coming in, you get taxed more than anybody. And this is where people get that misconception that the rich don't pay taxes. And we'll discuss that in just a sec. An S is a self-employed or a sole proprietor business. And that is just someone who is, believe it or not, doctors that have their own practice, attorneys that have their own practice, accountants that have their own practice, anybody who has to still go to a place of employment to have basically a job. I mean, a lot of these people, Rod, when we're in small business and they think they're going to start this small business, they think that, oh, I'm not going to be an employee anymore. I'm going to start my own business. Well, I hate to tell you this, but you just became an 80-hour-a-week employee, because it's a lot of work to run your own business. Not a bad thing, but it's still in that job realm. Now, when you switch to the business owner, a business owner is someone who really doesn't have to go in to make their money. And I'm on the cusp of that right now. I'm kind of swinging in that S to B, trying to get to that spot where I don't go in there anymore, and I've got other income coming in. So I've got a system in place and people work for me, but I'm not quite where I want to be yet, so we're working on that. Now, an investor is simply someone who owns stock or invests in a stock that has money working for you. You basically are very hands-off in that particular business. Like, that business is just paying you a residual every single month, and that could be a real estate investor or things like that. And they are the least taxed people in the I quadrant because they have a different set of tax rules. Excuse me. I'm gonna grab some water. Different set of tax rules that abide by them. Simple as that. So what you want to try and do during your lifetime is you want to be as quickly as possible switching from the E quadrant to the S quadrant to the B quadrant and then to the I quadrant. And that's where you ultimately want to end up, is where you're just doing something where you've got your money in there and it's paying you out dividends or it's paying you out some kind of a residual income, but you're not completely involved in that. And that's where you really want to shift to. So in the process of doing all that and moving from one to the other, you really have to learn how to track what you're doing, and that makes your taxes not as cumbersome, and it also makes you bulletproof in the case of an audit. If the tax man comes to your house or comes to your place of business, you want to be prepared. So to move through these quadrants and get to those higher ends, you really want to start getting prepared for the tax man. So part of this was about, okay, W-2 is the most taxed, investor is the least taxed, moving from one to the other. But as you do that, how do you prepare yourself for the tax man at the end of the year? So this stuff, to be honest with you, is not as hard as we make it out to be at first. A lot of people, when they first get involved in a business, they just freak out about taxes and stuff like that. And it's really just a matter of keeping records and making sure that you have that. And there's some really cool tools that we'll talk about here in just a minute as well. So what should you record? There's 5 W's and an H, and I actually blend 2 of the W's together. So I've always said there's 4 W's and H, but I just read something recently by a tax expert who said there's 5 and an H. So we're going to go with 5 and an H because that's what he said. So let's say you're out, any receipt that you have, folks, any receipt that you have needs to have this stuff on there to make sure that you are bulletproof at year's end. So the first thing, we're going to take meals as an example because that's fun stuff, meals and entertainment. Now, meals and entertainment are only a 50% write-off, but you also want to have bulletproof records on that. So anytime I go out to eat with somebody and I'm having a lunch with a prospect, these are the things I actually write on the receipt, and then I use my phone, snap a picture, and it automatically gets recorded, and we'll talk about that in just a second. So who are you with? So Rod was in town here recently. And obviously Rod's a business partner of mine. So we go out for dinner that night, and we switch off. One night I buy, one night he buys, and that's just the way it works, and that's the way you should be doing it with your team as well. Unless you're helping out. If you're the guy doing all the training, hey, your team should be paying for your dinners. But so you want to write down on the receipt who you were with. First and foremost, who you're with. Most of this information is already on here. But I'm going to tell you a little secret. I don't know if any of you guys have ever lived in a place as hot as Las Vegas, but if I put one of those little goofy receipts from a restaurant in my wallet and it's there for more than 2 or 3 days, the heat in the middle of the summer will have that thing blank within 3 or 4 days. So
Yep, for sure. I've
it's
had that happen.
right, or sitting on the dash, not in the dash of your car, but sitting in the console of your car, you forget to take it out for a few days. It can literally be blank, and the burden of proof lies on you. I don't know if a lot of you guys know that, but you can't just go to the IRS and go, no, really, I had a receipt, and they're just going to go, nope, sorry, that's not allowed. You cannot use your bank statements, and a lot of people think you can. And if your accountant is telling you that you can use your bank statement or your credit card statement as a receipt, go look it up. You can't. You've got to have a receipt for that. So that's where some of this new cool technology comes in really handy. So I write who I was with. I will write Rod Davison. Just simple as that. Now, what was the expense? You can write, obviously if it's a restaurant, it's pretty easy to say it's a meal, but just write on there lunch, dinner, meal, whatever it was, sushi. When? The date of the expense. Usually on the receipt, I will still write it on the receipt in pen so that does not fade. You also have where. So where was the meeting, party, lunch, dinner, and so on and so forth. And why? Why were you there? See, so I kind of, what was the expense and why you were there, I used to combine these. Now I'm not going to do that anymore. I used to say, had lunch with a business prospect and talked about our primary company. Had dinner with somebody and talked about. So now I'm just going to write, what was the expense? Dinner. Why? I asked for a business referral. I pitched him my business opportunity. You want to be specific there. Again, you can't just write prospect. You want to write on there why that meeting took place. Tried to bring them into my opportunity. I know that sounds a little weird, but the more specific you are, the less likely in an audit they are to say, no, we're not going to allow that. And then the 1H, how much? So how much did it cost? Again, is that going to be on your receipt? Yes. The cool thing about most receipts is you've filled it out, or at least I do anyways. You sign one copy for them and you give it to the restaurant. The copy I get, I also write my tip and total on there so that I have that. So I have it recorded how much. So really, really cool. So that's all you really have to record. And if you've got that on any receipt, whether it be a entertainment expense, whether it be an equipment expense, like if I buy a new piece of equipment, I will normally write on that receipt, that invoice, everything that I can write as far as what relates to these things here. So that's just a quick down and dirty way for you to record everything you have. I'm going to pop out of here and come back in to the Hangout, and then we'll talk about how to use that a little bit better. Now, there are new things out. You can use that Neat Desk. The Neat Desk thing is really cool. You bring your receipts home. I actually have the Neat Desk so that you can scan it, but you can also and I don't have the TaxBot one with me. I use Quicken, and Quicken has an application. But you just take your receipt, you take your phone, and you just do the old, you just shoot a picture of it. Bam. And it's a digital copy in here. This, I would not throw it out, but you can just toss it into a box of receipts. You really don't have to have that. I still, because I'm an annual record keeper, I put everything in a January envelope, anything in February envelope, so on and so forth, because I just want to keep it in case of an audit and something goes wrong. I want to have it. But most of those receipts aren't going to last us 7 years anyways, right, Rod? I mean, same thing happened to you then?
Yeah, I mean that's exactly what the big tip here is. Make sure that any expense that you're writing off in your business, that you have proof of it, because if you ever get audited and they ask for something and that receipt's blank because it's thermal paper and it goes blank. If it's blank, they won't accept it. It doesn't matter what you have written on it. So I always make copies of it or scan it in, like Paul said. There's different tools to do that. I know QuickBooks, you can scan it right into QuickBooks. I think Paul used Quicken Business, and I think it has an app to do it right from your phone. TaxBot is, if you're just starting out and you don't have any application, TaxBot is a good way to go. There's some 50% off specials for like $10 a month or $100 a year for TaxBot, and it'll track your mileage, all of your expenses, and everything. Print out reports. It's a certified audit protection system, so you can, it basically archives everything up in the cloud. So, there's a lot of options. You just need to find, what works best for you. I mean, I use QuickBooks myself in my business. I know Paul uses Quicken Business for his. So just, there's no one thing that works the best. It's whatever makes sense to you and your business,
Right. And when you're first starting out, I mean, you can literally use a ledger. If you're small, you're just starting out, and you only have a few things a month, you could actually, you can just get a book and write it in there and hand it off to a tax person. But if you guys, I think it's $100, or you can get them cheaper. You can get just Quicken Home and Business. Probably get it cheaper than that, where you just have to keep in little entries. You're gonna have to learn a little bit of software, but it's not that difficult to learn business expense and income, so you can track both of those. But the burden of proof lies on you, and it's ridiculous that those little receipts, like you said, those thermal receipts, they're supposed to last 7 years. Not going to happen, guys. So I would have some kind of digital backup on that, just because I never used to in the past, but now the more and more that I'm doing this stuff, I realize that I don't want to get caught in that he said she said thing where that receipt is blank. It'll it may not wind up being very much in the end, but it could be a few $1,000s. So I would make sure that you have some kind of backup of that. So that's the biggest tip we can tell you, is the burden of proof lies with you. Make sure you've got those receipts either written in pen, because that still works even if the receipt is blank. Believe it or not, it should still work, and or digital, and that's really kind of the best place to have them, and or maybe store your receipts in a fridge, but I wouldn't do that.
Yeah, I mean, I have thermal receipts in my file cabinet right now that are completely blank, but I made copies of them before I filed them, and and it's crazy the way, especially if you leave it in the car. I've had a receipt go completely blank in one day.
Mm-hmm. Yeah, it's pretty crazy.
They weren't receipts that I used for my business. They were personal purchases, which is why they got stuck in the car. But I mean, I've seen them, especially in the summertime. I mean, they will go blank in the matter of hours.
Yeah, it's crazy.
It's crazy.
So that's it, guys. Be ready for the tax man. Is just a matter of keeping good records. That's part of their requirements, is that obviously you work your business on a regular and consistent basis. What that is for you depends. It could be 6 hours a week. It could be 4 hours a week, as long as it's every single week. It's consistent basis. You have to be able to prove that you're trying to be profitable, and you have to keep good records. I think that's really the only three things that you need, right? And that's how you prove that you're in business. And those records, I am telling you, are so important. It's really hard for them to prove that you're working your business regularly and consistently, other than, if maybe you could tape a log or something like that, but I wouldn't go into, I don't think you need to go into that. But the receipts, you definitely need to hang on to those receipts. Those receipts are proof that you're working your business on a regular and consistent basis. When you're showing that you're going to lunch a couple or 3 times a week, and you're talking to prospects, and you're meeting for lunch and dinner, and you're having those things go on, that shows, one, that you're meeting on a regular and consistent basis. And you could actually almost probably use that to say, well, look, of course, because I'm doing that, I'm trying to make a profit. So good record keeping can save you from a lot of heartache when you have to see the tax man. So don't be afraid of April 15th, guys. It's really not that big of a deal. When you're first starting out, get as many write-offs as you can. Use those to your advantage, because it can be a significant amount of money. One of the guys on our team, Mickey Bertrand, said that's the reason he initially got started. He was paying too much in taxes in his regular job, and he wanted a way to curve some of those taxes. So you can actually do that, probably to the tune of anywhere from $2,000 to $5,000, depending on what expenses you convert. So that's really cool. And then once you're making a boatload of money, if you're making $10,000 a month, stop worrying about how much you're paying in taxes. That doesn't mean don't don't write off as much as you possibly can. It just means plan properly and pay your fair share and move on. But that's something I never have had a problem with, Rod. I think, look, I want to pay my fair share of taxes. but I don't want to pay a penny more. So how do you do that? You keep your records, and you do what you know needs to be done to make your business as profitable as possible.
Yeah, I mean, it's no different than keeping your check register, working, depending on what kind of job you have if you're working for an employer. I mean, and anybody if you work in any sort of industry where you have mandated either state or federal reporting, it's the same thing. You know that you have to keep good records. And, if you guys want additional tax tips, I think it was episode 2 that we kind of really delve into some specific home business tax saving tips. So writing off, your office at home, mileage, all those things. So we kind of went into a little more depth. So if you guys, want to re-review that, I think that was episode 2. You can find that on our Facebook page, which is facebook.com/The Evening Buzz. All the recorded episodes are there, so you can check that out. And I think that's about it for tonight. I think it's a wrap, huh, Paul?
Absolutely, absolutely. YouTube as well. You can just go to YouTube, and I think you could probably just search Evening Buzz, and I think we put the episodes as EP2 or EP2 or EP3. So you could actually probably just do the Evening Buzz tax, and it'll probably come up. But definitely some great free stuff on YouTube about all of this kind of stuff. And yeah, that's it. Let's wrap it up. Don't be afraid of the tax man, guys. He's really not a bad guy. He's here to help you write off and deduct as much as you can, as long as you're operating some sort of home business, some sort of small business. They're there. Those tax rules are there for you to take advantage of, not to take advantage of you as employees think. And if you're an employee, I'm sorry, but yes, it's gonna hurt, and you need to be in some form of business. So that's it on the Tax Man tonight. My name is Paul Cherone, and I'm done from Las Vegas, and we'll see you tomorrow night when we take you into Marketing Monday and get into video marketing.
All right, everybody have a good evening, and we will see you tomorrow night. Rod Davidson from Fresno checking out.